Very much for that, Samantha. The world's fifth biggest producer, Harmony Gold, posted a 13% fall in fourth quarter headline earnings per share to 107 cents and surprised the market with its first dividends in 5 years. The company, which is debt-free, said it had 2 billion rand in cash, which put it in a position to pursue acquisitions, invest in organic growth projects and to pay a dividend. Earlier, Stephen Gunyon spoke to CEO Briggs about the results and if shareholders can expect dividends going forward.
Well, we said when we've got a healthy company and, you know, the sort of everything's in order, then that's the time we should pay a dividend. And, you know, we had the cash to be able to pay a dividend. We're bullish on the gold price. We remain bullish on gold price. We have been doing a lot of restructuring and doing all sorts of things in the company, some big deals, and we've also raised some money from shares. But, you know, the time was right to indicate to the market that we're a healthy company.
So can shareholders expect more dividends going forward from this point?
Well, it's obviously highly dependent on the sort of what happens to the Rand gold price and how profitable we are. You know, we are doing a lot and have been spending a lot of money on our new capital projects. Those should come into fruition going forward, so grades will improve. Those new projects will have better cash costs. So, you know, things are looking up for us. It's a case of what's going to happen to the Rand, what's going to happen to the gold price. You know, we haven't got a dividend policy as such, so I think it's a little bit of a guesswork. But, you know, the whole arena with respect to prices and so on is very volatile.
Of course, you say paying dividends is a sign of a healthy company. Does that mean Harmony hasn't been a healthy company for the 5 years up to this point? Well,
I think, you know, 2 years ago we had a bit of a rough patch, and we have been doing a lot to get it in order. We've repaid our convertible bond, we repaid our Nedbank, and we still got some cash in the bank. So, yeah, no, we are now much healthier than we have been for some time.
Production disappointing, only up 1%. You were aiming for 3%, and but you do say you're on track to boost production to 2 million ounces.
Yep.
When's the yogurts leave the dock?
I don't particularly like the analogy, but yeah, no, I think we said that up to June this year, 2009, you know, we'd be doing all this hard work and we're getting everything in order. I mean, if you look at, for instance, the capital we spent during last year, we spent 4.4 billion rands worth of capital. That's a huge amount of capital. We've been spending a lot of money on ongoing development, and this is to improve flexibility, to be able to get those results done in the future. So I think everything is getting aligned with respect to production. I think it is a little bit disappointing. April, remember, was a bad month for us. We had a host of holidays which didn't help. We had the election which didn't help in the respect it helped the country, but not production figures. So, you know, there were disappointments during the quarter. We're the first to admit that, and we need to work hard on those.
I mean, you said you're bullish on the gold price. You expect it to move above $1,000 an ounce, and you expect it to be sustained there. What are the fundamentals do you think that are going to take it there?
Well, I think there's a lot of uncertainty in the world still, and gold has shown that it's a sort of a fundamental store of wealth. It is an investment. Now, people may be not buying so much jewelry, but they're buying ETFs, and the banks aren't selling gold and so on. So I think there are a lot of fundamentals which are really showing that gold is still a store of wealth, and we will continue to see that, I think.
And what's your strategy if gold doesn't perform as expected? Does it change your strategy?
Certainly. I mean, it doesn't change our strategy as such, but there are things that we have to do. If the Rand remains strong or gets stronger, in fact, which we don't expect, but if it does, we'll have to look at our capital. We'll have to look at the areas that we spend our capital on. We'll have to look at those operations that are flying close to the level. So, you know, we're going to have to look at that. But it's a case of, you know, how long does one take to do those things? It needs to be sustainable. Now, you know, even our marginal assets have been great cash generators in the last while. Now, one wants to preserve that and to be able to flex that should the gold price change. And I'm talking gold price in Rand terms here. So it's a case of, you know, how long and how sustainable are things at a low gold price. The Rand has just been all over the place. We expect the Rand to weaken a bit. The gold price maybe hasn't been performing like Peter said, but, you know, around 950 is a reasonable gold price. But, you know, our sort of plans are closer to the 930 in the exchange rate, not the 810 or 815 that it is now.
Well, you'll be happy to know it's trading at 8.20 at the moment, and economists think it's going to weaken further from there. Peter did mention costs, and you did have some cost pressures coming through in the quarter. Of course, we do have those electricity tariffs coming through from Eskom, which aren't helpful, and as you mentioned, the rand. How do you plan to manage that going forward?
Yeah, costs have been a big battle, and electricity especially is now becoming very, very significant. It's always been a big cost, but you know, sort of quarterly costs on electricity, about 170 million rand, now go up to 230 million rand. That's a huge increase on, you know, on the per cost ounce, for instance. And with the winter tariffs add more pressure to it. So, you know, we're going to have to look more and more on ways of using electricity in off-peak hours and saving electricity. There's quite a big battle there.
You are cash flush, you're debt free, you have 2 billion on your balance sheet. Are you looking at other acquisition opportunities, and how do you plan to, are you under pressure to deploy that cash?
No, I mean, that cash is not burning a hole in our pockets to get, you know, to spend. The nice thing about being debt free or net debt free, having some cash on, you know, in hand, is that all your other assets are actually encumbered. You can actually start doing things with the company without actually looking at those aspects of it, and that's a huge strength, to be able to do a deal if you want to do a deal, and you unencumbered. We have been looking around the world, in fact, for assets, but there's not much out there, and that's the reality of past sort of exploration failures, if you like. There's not really much to get your hands on. You do find projects require a lot of capital to get going. No, we're not in any hurry to spend that.
And you do have organic growth opportunities, and you are bringing new operations on stream at the same time.
We've got huge organic growth, and it's, you know, so much so that we'll probably have to bring some partners in to help us, because it's going to require a lot of funding.
South Africa's second quarter GDP